Yo, what is going on, guys? Welcome to another video. Let's go ahead and get right into it. So the Fed meeting minutes just recently got released, and I'm going to go up and put up the chart right here because I actually screen recorded what the stock market did right when the minutes came out. So I'll let you guys take a look at that real quick. You can see right here that as soon as the minutes came out, the market actually shot up, right? It actually shot up and did its thing for at least a few minutes. And then after people started to actually digest the minutes, the market actually went down, which you can see right here. So needless to say, these are some extremely volatile times. And this is an extremely volatile market. Now, for those who saw my video yesterday, I believe that I actually pointed out that during interest rate environments where the Fed is raising interest rates and they're doing quantitative tightening, the market is extremely volatile. We actually saw this in 2018. 2018 was one of the most volatile years for the stock market ever. It was literally one for the record books, the crazy volatility. And this year is shaping up to be no different, considering the fact that this is a year where the Fed will be doing both quantitative tightening and raising interest rates. So now let's go ahead and get into what the Fed actually said, right? So let me give you guys some highlights of what actually came out of those meeting minutes. Keep in mind, these are the minutes from the May 4th meeting, right? Now, so here's what happened. Most Fed officials backed 50 basis point rate hikes at the next couple of meetings. Many see Fed as well positioned later this year following quantitative tightening. On top of that, all back plans to begin shrinking the balance sheet. They are all backing the plan to do that. Once again, shrinking the balance sheet is quantitative tightening. They are all in favor of that. They're fine with it. And they also all agree that the economy is very strong and that inflation is very high. And that's where it starts to get interesting, because you have a bunch of people on Wall Street who do not agree with the Fed. And keep in mind, this is from the May 4th meeting. Now, obviously, you've had several updates since this meeting took place. You had the April home sales that came out. You had the whole thing that happened with Walmart and Target that just recently happened. And you had a few other things that took place. So there are some indicators that are making some people on Wall Street believe that the economy is actually not strong and it is weakening. So just keep that in mind. Now, officials said that Q1 GDP decline contained little signal about the economy's underlying strength. They also suggested that a restrictive policy stance could be appropriate. It's important to keep in mind that such a declaration could mean that the Fed is prepared to raise rates beyond the so-called neutral level, which many define as a rate of between 2 and 2.5%. I think that's why you're seeing the market be so volatile today, you know, having these crazy swings. And obviously, we know that the Fed is doing all of this with the intention of attacking and fighting inflation. Now, it's also important that most noted that 2 more rate hikes of 50 basis points each in both June and July was likely the most appropriate path. They all agreed to that. And I wanted to read this other last part to you guys. Participants agreed that the economic outlook was highly uncertain and that policy decisions should be data dependent and focused on returning inflation to the committee's 2% goal while sustaining strong labor market conditions. Now, we'll see how all of this plays out. We have no idea what's going to happen going forward. Remember, they do have another FOMC meeting in the middle of June. That is actually the meeting that I am very scared of, especially considering everything that has pretty much happened since the last FOMC meeting. I've said this plenty of times. I think they are going to start to get a little bit more aggressive. In this minutes, in my opinion, they seem to be hawkish and aggressive. And what's scary is they seem to think that the economy is doing well, which is not so good, because if it indeed turns out that the economy is not doing as well that they thought, they could really make things really bad, especially pretty much drive us into a recession with these aggressive rate hikes and this hawkishness. So we'll see how things shape up. Again, what am I doing in this situation? I'm just sitting on the sidelines and watching what's going on. I'm stacking up money, stacking up cash, continuing to do that. And I am not buying stocks. And I am very satisfied with that decision, given what I'm seeing literally on a daily and on a weekly basis in the stock market. You know, my main indicator of when I want to start buying stocks again for me is going to be the Fed. I am going to be watching the Fed like a hawk and paying attention to what they're doing, and pretty much what their actions are kind of dictate to me what I'm going to do. Either that, or if the stock market were to drop another 10-15% from here. Now, if the stock market like the S&P 500 were to go down maybe 35-36%, which is what it has dropped on average, see my last video to find out that data, then maybe I will begin to start to put some cash to work. But for right now, you guys know how I feel. I still think we have a lot more pain to go. This entire situation is nothing but drama and mess, and I want nothing to do with it. So although I remain invested in the stock market, I haven't sold a single stock, I still have my core investments. I still would rather hold my cash on the sideline and continue building my cash position and wait until we get more clarity and more certainty going forward. And there you guys have it. That's my update. That's how everything went with the Fed minutes. Hopefully you found value out this video. And if you enjoyed this video, feel free to like, share, and subscribe. And I will see you guys in the next video.